Hey guys, it's Kyle from InvestiShare. I'm just going to go over the charts really quick to show you what kind of happened with the reverse head and shoulders and why it kind of failed, and what formation that we're looking at right now that we're preparing for a potential 8% move. But yeah, let's dive into it. I'll show you what I see, and let's get prepared. All right, so this downtrend level of resistance right here was the neckline resistance for the reverse head and shoulders that we were looking at before. So this was the shoulder here, and this was the head right here. And the technical target for this was around 26,000, which would have been great, but I understand it not being very realistic at these times. But basically what ended up happening was we got support bounce here. I entered off this, but as soon as I saw that we were getting a rejection off of the local level of resistance right here, I had to get out. And we had a W formation. It actually ended up hitting the W formation's target, but as soon as it hits the target, we got rejected off of the area of interest off the VPVR right here, this red line right here that's drawn by the indicator. And now we're slipping below it and using the support as resistance again, and we're starting to form a new formation. And what this new formation is that I'm seeing in the charts is an Adam and Eve formation. And if you're not familiar with an Adam and Eve, it's a lot like a double top. So basically you grab the support here, and this is the Adam and Eve. So this is the Adam here, and then this is the Eve. It's a form of double top formation. How you grab the technical target, these are typically very bearish, but how you would grab the technical target is you would grab the top of the Adam part and bring it to the base of the formation, that's support, and you just drag this trend line down below, and this is how you get the target. I'm just going to go over to my other chart here really quick, just so we can see all the levels of interest a little bit more better. Let's delete this trend line. Alright, cool. Let's get rid of this trend line too for the noise. Anyways, so yeah, the Adam and Eve, we got the support level here, and we got the target right here. Put this down below. So what I could expect based on the VPVR, the kind of behavior we can see in the market if we end up breaking to the downside, because we are getting this little consolidation right here is technically a form of rejection off of this area of interest right here. And if that plays out, we'll go to the next area of interest. It'll give us the momentum that we need to break down below this. And we have an area of interest here and a small area of interest right here. And it's in confluence with the most recent bottom for Bitcoin right here as well. So basically, if we break below, before entering a short, you would always normally want to wait for a confirmation so you can have an increased win rate. You could technically enter right off the breakout, but you risk having an increased loss rate. So yeah, the stop loss would be right above the recent high, which would be right around here off of breakout. If we get a confirmation, I would put my stop loss here instead. We wait for the price action to go down below, come up, use this as resistance, and then it'll go down towards its target. Another thing that you could end up seeing because of the area of interest being right here is behavior like this, where we go down relatively quickly because of this valley right here, and we get a bounce, then we get the rejection, and then we come down, break below that area of interest, and hit the target of 18,300, which is about an 8% move. Let me double check that for you right now. Yeah, it's 8.04% move. The risk reward ratio is actually pretty good on this trade, so I would definitely be taking it. If I were to put like my short tool down off of this trade, let's say we entered roughly around here. We move our stop loss, worst case scenario, right about here, and the target would be right here. We'd have a 1 to 2 risk to reward ratio. Now, if we get that confirmation rejection, we can have our stop loss in a more secure location and have a better risk to reward ratio of 1 to 4 risk to reward ratio. Now, this could easily flip and turn into a W formation, so you got to prepare for that as well. You can't just enter because things are looking bearish, you can't just enter a short. You have to wait for that confirmation that we were just talking about first, where we go up and see this rejection. Because what could end up happening is this could stay as support, and then we could bounce right back up. This would be the neckline, and then we would have a different, target altogether. So we'd have a target like this. If we get the bounce here, and we broke this neckline's resistance, we'd have a target of roughly 23,700. So just prepare for both those scenarios, guys. But things right now, based on historical price action, this formation is typically bearish, and we are below the area of interest, so it's going to act as a fairly strong resistance. But prepare for anything. That's what a sophisticated trader does. You don't just enter because you want to enter. You wait for a confirmation. Either we get this rejection here, we'll enter a short. If we get a bounce, you could swing trade it to the next level of resistance, but that's a lot more risky. If you do try entering, if we do see volume support bounce here, you put your stop loss right below, right here, and ride it to the next area of interest or resistance, and start taking profits along the way up. Or you could wait until we hit this area of resistance here, hopefully break above it, and ride it a little bit further. Yeah, but that's everything I got for you guys. If you have any questions about this, you know how to reach me in the Discord. Have yourself an amazing day, and thanks for watching.